Tax. Now we're going to move on to the best or the most common remuneration methodology surrounding expatriates. So remember, your remuneration policy surrounding expats is usually a standalone policy, and this is due to the complexity. It's not as simple as your normal local policies. And you should integrate your tax policy into this. Remember that it cannot be seen in isolation, and you should have tools and processes in place to explain the policy before mobilization to ensure that you've got that absolute transparency. Right, let's look at the first type of remuneration methodology. That's the total guaranteed package, and this one I think South Africans are quite well versed with. So an expat is offered an all-inclusive remuneration package, which is structured to suit the expat's personal and financial requirements. And you find this is most common where there's very few expats, and the employees are compensated according to the leading practice in South Africa. And it also assists when there's an easier transition. When the expats come back to South Africa, they're then fully aligned with the remuneration structure in the home country. It also works where there's no redesign of the policies, so you would just tweak this slightly from an international perspective. Right, then you have another popular approach, and that is the local plus approach. So that's a variation of the total guaranteed package. This is where the host country determines the benchmark salary, and they would also assist with your job grading, the job description, and they would benchmark the correct level of pay. But in addition, the expatriate would get additional benefits and allowances, which are not provided to your local employees in that host country. And these are usually fully taxable. But remember, these additional benefits are not to enrich the expat, but rather neutralize them so that they can operate effectively in the host country. So an example would be here when unaccompanied expat still has to maintain their home and vehicle in their home country, you would also provide these benefits in the host country purely as an additional cost, okay, by reason of the assignment. So when would you use a local plus approach? With the increased diversity amongst expats, it ensures consistency across the board, irrespective of which home country the expats come from. There may be potential cost savings with the local plus approach. It's simpler to administer, and it's a good option for permanent transfers and localization because then you follow that REM practice in the host country. And you also find organizations use this for career development or graduates because you find this more cost effective. So if you're anything like me, I like a visual illustration. So here I've showed you, you've got your home country basic salary. It's benchmarked to the host country, which might be slightly lower, but then you would add your benefits and allowances on top of this. Okay. Then we move on to the balance sheet approach. And many multinationals use this approach, and your tax equalization principles are entrenched with this. So the home country base is used to compute that net take-home pay, which the expat would have received if they remained at home. So the expat maintains their purchasing power. Various components are then added over and above the employee's remuneration, and this list is endless depending on your remuneration methodology and the jurisdiction where you operate. When would you use the balance sheet approach? It's easier to integrate when the expat comes back home because you're linking the compensation structure. It creates fairness on the cost of living and tax differential, and it ensures the expat earns no more or less than if they had remained at home. And I explained that in Expat 101, you're creating that baseline that keeps them neutral. It also promotes mobility. So remember, the expat will not suffer irrespective of which tax jurisdiction you move them to because they've got that guaranteed net salary. And it's also the most widely used method for compensating expats. I've had extensive experience on the balance sheet approach, and like I mentioned, many multinationals will use this approach. So I've added a little bit of a visual So over here on the left-hand side, you've got your net guaranteed salary with your disposable income. The expat would, spend on savings, insurances, other luxuries, holidays, as well as housing. And that would be maintained when they go on assignment, but you would add certain premiums for housing, maybe a cost of living allowance, and any other benefits and allowances on top of that. Right, and your last remuneration methodology is the guaranteed net salary approach. So this is a variation of the balance sheet approach, and the expat is offered a net of tax salary package. So you usually adopt this approach where you've got very critically skilled expats who are technical or at a management level. So the expat demands a net guaranteed tax position per year. So they actually say, I want to get so much money in my pocket every year or every month, irrespective of your social security, tax and statutory contributions. So remember this, you would have to gross a lot of this up, and that would add to an additional cost factor here.